Hi everybody and welcome to today's event where we have the pleasure to present NNIT. Joining us from the company we have Per Fors, CEO, Pernille Fabricius, CFO, to help us through today's presentation. The event, of course, much focus on the divestment of the infrastructure business, but maybe also a look into what is continuing and how does this fit into the strategy about focusing and trying to accelerate growth and profitability. As always, you can ask questions down in the box down below. Do it in English, do it in Danish. I will try and translate to my best of abilities, so do not hold back. But I think for now, I will hand this over to you, Per.
Thank you very much, and thank you all the rest of you for tuning in on this presentation. Just a few minutes of the background, why we are standing here in the first place. That is, I started as a CEO for NNIT pretty much a year ago. I came to a great company with great competences, great solution, and long-lasting client relationship, not the least relationship with Novo Nordisk. During this year, we have improved a lot of things in the company, while we in parallel have been winning a lot of new business, which is super good, and we are really strengthening our position in the marketplace. But having said that, there are things to improve. And at the beginning of the year, we introduced a new organization where we established 3 separate business units, collaborating closely. But even after that, we were looking for further ways to actually improve the business operation. And in our business, before the transaction and as we speak, we have 2 kind of different business models. We have the consulting business model where we primarily sell projects and competence high up the value chains to primarily the life sciences industry and the medtech industry. Then we have another leg, which is our infrastructure business, which is long sales cycles, 12 to 24 months, long contracts, 5 to 7 years many times, and quite complex content over delivery. So kind of in the same house, we have 2 different business models. So therefore, we were thinking we would like to focus primarily on the life sciences business together with our project and consulting business, because there we can see that we can establish ourselves as a high value add consultancy house for primarily the life sciences industry. And we think that we can provide the highest value to our clients and also to our people. To enable that, we need to find a home for our infrastructure business, which we have done now. So in this transaction, we are moving over our infrastructure business, which is it's a fully fledged house, a complete service offering within infrastructure services, including cloud transformation capabilities. And in order to minimize the impact for our clients and order to make the best for our people, we choose to find a new home with an investment company versus an industrial player. We think this will make the transition process much smoother for both our people and to our clients, not the least. So we are really pleased of standing here, and just to give some flavor on the business we are divesting. It's a leading Danish IT infrastructure business. We are one of the top players in the Danish marketplace, where our client base is a private and public sector in Denmark. We are maybe one of the 3-4 companies in Denmark which have the breadth and depth of competence and solution to address the larger IO outsourcing market in Denmark. We can deliver both legacy infra and cloud capability based on our 2 top modern CO2 neutral data center here in the Copenhagen area. So it's really a business of high value that is growing and have been winning a lot of business lately. If we look at the remaining NNIT, which is actually a highly specialized IT service provider in very high growth areas. It's about 1,650 employees. We are shipping over 1,500 employees to Agilitas, but the new co would be the NNIT would be about 1,650 employees, and we are established with market presence in both Europe, Asia, and in the US. We have built our capabilities during the last 15, 20 years through both organic growth and through acquisitions. And the focus is that we have a complete range of services for the global life sciences industry. So that is one part of the remaining business, which is actually with in-depth solution that address the line of business of medtech companies and pharma companies. That's one side of the coin. The related side of the coin is our project and consulting business, which we call cloud and digital solution. And they operate both here in Denmark on the private and public market with a complete or wide range of services with its high-end digital transformation services, but that is also used to transform our life sciences clients. So it both works on the private and public market, but we also see a great potential to further enhance the kind of collaboration with our life sciences clients, because the life sciences sector is actually fairly low on the maturity curve in terms of digital maturity. So it's a great potential to actually drive and continue to drive transformation of them to also be more digitally matured, in parallel as to deliver high value adding services to their all different phases of their kind of production cycle, everything from R&D to the test environment to production IT and commercialization of their products. We really have in-depth solution to address all of those different kind of cycles. That is some kind of flavors of why we did it. What are we kind of now getting over to new harbor, and actually the some kind of overlaying level, what are the NNIT of the future. But Pernille, if I hand over to you to tell about how the transaction will look and what is kind of happening now, or also maybe talk some financial numbers of the two businesses.
Yeah, definitely. So if we look at the different businesses that we are going to focus on going forward, the life sciences is of course the business that's a very big focus point for us going forward. It is a specialized business with regulated IT solutions that support the life sciences segment and value chain. There is a focus on agile services there, and we are also there going to build on the business we have with acquisitions onto it. So it's more of what you have seen over the past couple of years, with the exception of Q1, which was a bit of a bump due to a few contracts that were postponed for us. Another area that is the continuous business is the CDS business, which is a digital transformation business centered around applications. So it's Microsoft solutions, SAP solutions, cybersecurity, custom application development, and digital business consultants. Here, there's a focus around solutions, application centered around solutions, and we have a focus on building critical mass to deliver these. Here you can see we've had also a growth and a relatively higher margin than what we have seen in the infrastructure business. Those two businesses, the life sciences business and the CDS business, are the businesses that constitute the NNIT going forward once we have closed the deal. If we look at the timetable talking about closing the deal, we have a signing that we've just done, and Per and I went to the investors with and the whole market with the 22nd of June. And now we have entered into what's called a transition. In this case, the transition is quite a number of months. We have listed 6 months here. And in those, we're going to both focus on talking to the customers. We're going to focus on getting everyone into a separate legal entity. We're going to split our systems and all of that in a sort of a row in order to be able to actually, at the end of it, so-called hive this business down into its own legal entity to then send it over to its new home that Per just talked about. So it's going to be quite a journey for these months. There can be a variation to the 6 months. It can be less, it can be slightly more, but that's where we are now. What's also listed here is that we have some Q reports that we're going to, of course, report on both in August and in November. The aim is that in August we are going to basically show what is it that the NNIT is going to look like going forward, and what is the business that we are dispersing of going to look like going forward. And that's also the moment where we intend to provide a guidance for the business again, because we basically pulled that guidance with our an announcement of this. If we just take a look at the financial aspects, we had a transaction that was worth 1.5 billion. And with that, we've also given the buyer a vendor loan note of 200 million. That runs for 6 years. So this means if there are no adjustment to this deal, the net will be 1.3 billion of plus a reduction of our debt to what we get out of proceeds. If we look at the last piece here on the slide, then we also have 200 million estimated of carve-out and separation costs, and there are also taxes related to the divestment. So in summary, kind of when you look at the 1.5 billion, you need also to bear in mind that we have a vendor loan note. We need to perform to what we have promised over a period of the 6 months, and then we also need to bear the carve-out costs, and then we have the proceeds. The proceeds we have listed goes into the company, so it goes into NNIT, and it's being used for recapitalize the company and also enable it to acquire, as Per talked about, for the going forward. As I said, the outlook we suspended basically because this is a really significant transaction, and we are going to come back in August to then show the discontinued activity, so the business we are selling off as a separate, and we are also going to introduce the new 22 guidance in August with both the show the revenue and the EBITDA that we are expecting at that moment in time. So with these words, I will hand the back to Per.
No, so a little bit to summarize it. I mean, this is actually a transaction with the aim to build the NNIT of the future, which will be a company that is primarily focused on the life sciences industry. And I think that's the right spot to be, because companies, IT companies that are focuses on the specific industry segment, working high up in the value chain, has at least laid the foundation for a good market position, be a good company for everybody working at NNIT, and we will also be able to provide good value for our clients, but also actually a good valuation going forward when we come to that kind of point in time. So that is super important. The M&A journey will continue, and we have proved that we have a successful M&A strategy, having a good process of integrating the newly acquired company into the group in a cautious process. And of course, this transaction will further enable us to accelerate that journey when we have completed the transaction versus towards the end of the year. This is, I think maybe we can stop there and open,
take the questions.
Take the question, whatever they will be.
Perfect. Let's jump into the first one. Are there any obvious acquisition candidates? If you can't spend the money, will there be any extraordinary dividends? You say that it's going in for growth, but if you're not able to to find candidates? Will there be maybe some payouts? If I understand correctly, also the investments was more heavy in the divested business, your CapEx, so cash flow going forward.
Yeah, but the strategy with this transaction actually to grow the company, both to continue to develop our service offering for the organic growth, but also as an add-on to that, accelerate our M&A journey. So the intent of this transaction is actually to make that happen. That is to grow the company and through that provide and enable shareholder value more than paying out dividends. And
are there any candidates out there? I know you can't be more specific, but
we are continuously scanning the market, and we of course were aiming through this transaction for a bit larger companies. I mean, today we have mainly bought companies maybe up to about 100 FTEs ish, and of course with this we think we can move up the ladder a bit and buy somewhat larger companies. And we're not talking companies of thousands of people, but probably move up to the range of 500 people. But of course, if we find a candidate company with 100 people, we are definitely going to go for that as well. But all things equal, this will enable us to go a bit larger. And we also see that a bit larger companies, and then primarily within the life sciences space, we can opportunistically find also more technical companies in cloud, cybersecurity, etc. But our primary focus would be within life science. From a geographical perspective, we are scanning the market in Denmark, but we have actually during the last couple of years found better opportunities outside Denmark. And I think that will likely continue. But of course, if we find a company here in Denmark, we'd be happy to conclude that as well. But I think there's a high likelihood that we strengthen our offering in any of the geographies where we're already existing outside Denmark.
And if you look at the life science and IT, maybe it's not that well known. Is it kind of a fragmented business? Is it a lot of maybe smaller size companies? Yeah, if you look into where you left it, it's the big, the big techs of the world.
If you look at the life sciences industry, on the real big pharma companies, on the real global programs, you have the really big players like the Accentures, like the Cognizants of the world, that can really deliver the really big 100 millions pluralis in euros kind of projects. And that's not our sweet spot. Our sweet spot is the segment low, that we take part of the business of big pharma and can run the entire program for the segments below big pharma. And in that segment, you can see there are a number of, we are actually a big player in that segment, but in specific technology areas. But we see that we can strengthen our presence and looking at those companies that are a bit larger than our company, they usually contain a mix of life science, deep domain knowledge, added with some digital transformation capabilities, being business consulting, advisory, cloud, security, application development. So we think we are really in a good spot today. As about our remaining business, we do have some quite significant part, which is more digital transformation. And we see that many of the larger successful company also have a combination of that. And we can definitely foresee that the next acquisition target could be a company that both contains life sciences, but as a topping some actual digital transformation capabilities as well.
Perfect. Then there's a question: what is being done to keep the customers in the shift? I guess the price is a little bit dependent on that, and maybe also something I noticed that Novo Nordisk, a very large client, is willing to make the shift and committing that. Does that help you by negotiating by the clients you now are negotiating with? Negotiating the shift with?
No, it definitely helps that. But I think the most important one in that sector is our client intimacy strategy. I mean, we have a strategy in this company that live close to our client, be it here in Denmark, across the globe. We like local offices where they help us to be close to our clients. Having said that, in this first week after the transaction, because that's actually where we are right now, we've been talking to all our clients. And on an overall level, number one, they understand the logic behind this transaction. They also understand the logic by finding a buyer that is an investment company. And so now we are in the process of actually continue that discussion, and we are going to do that after the summer. And that's why the reason we've said that this transition period will be 6 months is that we believe in taking this in a cautious approach, not to stress or put pressure on our clients, but have this dialogue in an orderly manner. And I'm very confident that we'll be able to conclude that dialogue due to a high quality in delivery and our client intimacy approach.
Then there's a question here. How are you being able to lift the margin by the continuing business? Was there not any large-scale advantages by being a larger company? You always hear that should be something. Was there no synergies between the two businesses? It might sound a little introductive, that you can lift margins, but being a smaller company, it's not normally what we hear.
Yeah.
So I can maybe give some answers to this, because it's completely understood that without doing more than what we have just announced here, we can't lift our margins. But what's important to understand is that life sciences sits within a segment with high growth and high margins. CDS sits within a segment that has sort of lower growth but still growth and margins to the tune of 10%. And then when you have the IO piece, that is actually much more flat and much lower margins than what the other two should have. In connection with this split, we need to also adjust the so-called remaining business, or the NNIT business, to the new situation. So we are going to look at much simpler processes, much improved simple systems, and also a different go-to-market, have a different go-to-market approach, whereby we are going to over a sort of year or so improve the margin significantly. So it's absolutely true that just splitting it doesn't necessarily improve the margins, but with this initiative, that definitely is going to also lead the way.
And I think it's really well put, Pernilla, and just to underline the fact, in this combined shop we have today, with these two business models living side by side, the complexity level of one business kind of sets the floor for the rest of the business, meaning that you need to operate also in terms of all the processes circumventing the business. You could actually make that much more lighter in a more consulting and life sciences setup. So that will mean that we can operate the business with a much lower overhead, as we will simplify the processes. And that's another lever to increase the margin on top of what Pernilla said.
Yeah.
Then there's a question here, I guess 22 will be a transition year. What kind of organic growth rate is realistic in 24, and how about the EBITDA margins? I applaud the person for trying, but I guess you're of course allowed not to guide that far ahead.
That is a brilliant question that we're going to answer in August.
Okay, thank you. But everybody should be trying.
Yeah.
How much growth has there been in continuing business in the recent years? Has it been higher or lower than the total business?
So that's of course a bit of the answer that we gave before. So in the continuous business, this is a business that sits in two segments that notoriously have quite higher growth than the other, and it's the same that has been mirrored for NNIT. So it has definitely been for life sciences solutions quite a growth journey, and also in some bits more than others in CDS quite a growth journey, and so a different situation for the infrastructure business.
Perfect. And then regarding your order book, was that primarily related to the divested business or the continuing?
It's a mix, but in terms of order value and backlog, in a consulting business, the backlog is of one kind of characteristics. If you're an infrastructure business, it's a totally different one, right? Because take the bid of Nationalbanken It's a 5-year contract containing quite big numbers, and those kind of contracts you very seldom make as a consultancy company. So yes, there will be quite significantly changes in our order book, but of course we always look on the book to bill to make that happen as well, because I mean it's important to say, I mean in the NNIT going forward, there will also be a lot of larger projects, not the least within customized application development, where we also include the application maintenance piece, which is a very lucrative business. So the company in NNIT will not only be selling hours, but it also projects and also some application maintenance activities as well, and that is a good one.
And then there's a question here, and again, I applaud the try. I don't know whether you split it down there. At what price, in terms of PE, the price earnings multiple, did you sell the divested business for?
Yeah, that's also one that we have to not answer because it hasn't been disclosed.
So no, and anything about it? Was it primarily done on EV sales multiples or EV EBITDA? And I guess you're still not, even if we go to those multiples, allowed to allude a little bit on it.
Yeah. Well, we can just say that it has been a normal negotiation process where everything has been looked at, from potential top line and order backlog going forward. As well as the whole sort of structure and of the company. So.
And then, will the growth in your continued business be affected, perhaps short term, by by you having a lot of focus on not just selling it, but also having to carve out the businesses and building up those structure? Will we see some effect on the growth rates in the short term, maybe?
No, but in general, I mean, there are two different businesses. The majority of the effect will be, of course, on the divested business, because their people will be heavily involved in this, not the least the carve-out project. But on the client side, on the life sciences side, I mean, of course, there are some client interaction where you need to direct focus on kind of doing the kind of splitting up of the two companies from a contractual perspective. So yes, it will consume some energy in the short term, but we're doing everything we can to minimize that as long as possible.
Yes, and I think we have a final question here. Your track record has not been that impressive. The growth has lacked a little bit. How should we monitor the new journey from a financial perspective? Is that will you set a new longer-term targets when the divestiture has been there, and kind of that's what we should start to track, or how do you talk about maybe some financial perspectives that we can track, that this is actually giving the accelerated growth or profitability?
So from a financial perspective, let me take that. First of all, we are going to ensure with all the sort of what we also talked about, that we mirror the good in class within life sciences solutions and CDS in terms of growth and profitability. And this is quite a journey that is going to take first of all the sort of transition that we are in for 22, but also way into 23. So when we are there and we can see that we are where we should be, then definitely we have an idea of what good looks like and what goals we should set ourselves in terms of both growth and profitability. So what I would say is not just for now, but definitely at the point where we're through this.
Yeah. And I mean, we talk a lot. I mean, as I said in my introduction, coming to NNIT, I was very much impressed by most, like everything, apart from the margins. I mean, I think we can do much better, and this transaction will lay the foundation to enable that. So we will come back, as Pernille said, with more exact numbers in August, where we are and where we're going. But clearly, our ambition are much higher than what we are delivering at the moment.
And then maybe if I can have a final question. I've seen some people discuss this, that you didn't give a guidance. Is that is that only because you don't know the exact nuts and bolts and what will be placed, or is it also a little bit what we are seeing from other companies, that they are starting to see some kind of an environment where it's a little bit more tougher to make a call? So if you can elaborate a little bit on why you didn't guide after this one.
Yeah, no, I can certainly do that. It is related to the transaction. It's not related to anything other than that. And when you almost split the company in two pieces, and there's quite a bit of carve out that has to be done, including talking to customers, it is the right thing to do. We judged, Per and I and people around us, to basically withdraw it, get a very good overview, and then come back with it once we've gotten that. So it's not about market, it's about the transaction.
Perfect. I think I will leave you with that question. Thank you very much, Per and Pernille, for taking us through the presentation and trying to build the framework why this has happened. And thank you to the audience for some good questions. And everybody have a nice day.
Thank you.
Thank you very much.
Thank you for tuning in. Thank you.